A very good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Monday, March 10th, 2025. This is Nelson John. Let's get started. For years, Canada and India shared a promising yet strained relationship. Two economies with immense potential, but weighed down by diplomatic tensions. Then came Mark Carney, a former governor of both the Bank of Canada and the Bank of England. Carney wasn't just another politician. He was a global finance heavyweight. When he took charge of Canada's Liberal Party, positioning himself as the country's next prime minister, he made a bold promise to rebuild Canada-India trade ties. Carney knew the stakes. As the chair of Brookfield Asset Management, he had overseen billions in Indian investments. He understood India's booming markets, its hunger for infrastructure, its growing influence in the global economy. Now, he's betting big on restoring this trust. If he succeeds, it could unlock massive bilateral investments, new tech collaborations, and expanded market access for Indian businesses. But the road ahead won't be easy. Skepticism lingers, and the past tensions won't disappear overnight. But still, Carney insists shared values can drive stronger commercial ties. If he can turn words into action, Canada and India might just find themselves at the start of a new economic era, one built on trust, trade, and economic transformation. India has slapped a 10% import duty on lentils while keeping yellow peas duty-free until May 31st. This move, split between basic customs duty and an agricultural cess, signals both revenue interest and a push for self-sufficiency. Lentil consumption in India has surged, driven by the rising protein demand as millions move out of poverty. Yet, domestic production has struggled to keep pace, with over half of the 3 million tons consumed annually coming from imports, primarily from Canada and the US. The tariff aligns with the government's broader push to boost pulse production, offering protection to local farmers. Meanwhile, yellow peas remain duty-free, suggesting they don't need similar intervention. At its core, this policy reflects India's ongoing balancing act, shielding local agriculture while navigating global trade dynamics. But as barriers rise, so does the question: could freer markets have done a better job at ensuring food security? Gensol Engineering was a rising star, an ambitious player in the solar energy and the electric vehicle sector. But behind its meteoric rise lurked a hidden crisis. Its chairman, Anmol Singh Jaggi, borrowed heavily, pledging shares to fuel expansion. By February, he had pledged 85.5% of his stake. Then cracks appeared. Missed loan repayments to tenders like IREDA. Rating agencies downgraded Gensol's 716 crore rupee loans to default, and its stock nosedived 37% in a week. Now, investor confidence has crumbled. Questions swirled. Where was the money going? Why was execution lagging despite grand plans? As scrutiny mounted, a desperate Jaggi sought a way out, selling off Gensol's US solar tracking unit and electric vehicles worth 315 crore rupees. Survival now hangs on hope. If the deal materializes, Gensol might weather the storm. If not, lenders could seize control and a once thriving company might face a reckoning. For now, Jaggi insists, we know how to build solar plants, how to build EVs. But investors are asking, does Gensol know how to escape its own debt trap? Investors are closely tracking Bharat Electronics, BEL, as it aims to secure 25,000 crore rupees in orders for FY25. So far, it's bagged 14,000 crore rupees, including fresh orders worth 577 crore rupees last week. Despite a slow start, BEL's management remains confident, citing a strong project pipeline for the coming months. Jefferies India notes that while BEL has consistently met expectations, muted order flow and sector derating have weighed on its stock, which is now 19% below its July peak. Analysts say March-April order announcements could be a key trigger, though some deals may spill into FY26. Looking ahead, BEL is banking on two major defense contracts, QRSAM and MRSAM, worth over 40,000 crore rupees expected in FY26. With negotiations complete, these orders are in the final stages. BEL is also diversifying into non-defense and exports, including a rail anti-collision system to reduce reliance on defense contracts. With a robust 71,000 crore order backlog and strong execution, 25% year-on-year revenue growth and improved margins, BEL seems poised for steady growth. However, all eyes remain on its ability to meet near-term order targets. Oil prices are sliding again, weighed down by weak economic signals from China and a cautious global market. Brent crude is hovering near $70 a barrel, while WTI has dipped below $67, both at their lowest since 2021. China's latest inflation data added to the gloom, with consumer price falling into deflation for the first time in over a year, signaling weak demand in the world's largest crude importer. In the US, uncertainty looms after President Trump spoke of an economic transition, while Federal Reserve Chair Jerome Powell signaled no rush to cut rates. Oil's downturn is also fueled by growing trade tensions, OPEC's plan to boost supply from April, and speculation around a resolution to the war in Ukraine. Traders are pulling back, with net bullish bet on Brent seeing their biggest drop since July. Saudi Arabia has responded by cutting oil prices for its key Asian market, its first such move in 3 months. Analysts warned that if Brent breaks below $68.33, technical and forced selling could accelerate the slide. For now, the market remains on edge, watching for the next big move. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a marvelous Monday.